You had earnings in late January, record EPS, core deposit growth of 4%. So overall, a strong quarter. Your stock jumped on the report, and we're going to show the chart here. Then we saw some fluctuations. So you had a strong quarter. We see the fluctuations. How much does New York Community Bank and the issues there, how much do they affect your investor confidence and also your customer confidence?
Yeah, I think early on the reports were a little bit like reopening the wounds from last March and April. And so unfortunately, all bank stocks really took a dive after that. Having said that, I've just come off the road, a meeting with 40 plus investors and a bunch of CEOs. And I think we all think it's relatively isolated here. So I think investors are gaining confidence. Interestingly enough, too, long-term investors and generalist investors are starting to come back and look at the space. I think they're doing their homework right now, not quite ready to get back in, but I'm hopeful at some point we get a little more clarity around interest rates, we get a little more clarity around the election, and we might see a better bid for bank stocks.
So you're mentioning interest rates. How closely do you watch Jay Powell's testimony on Capitol Hill today and obviously tomorrow?
I think we're all looking for signs. We're all looking for signs.
What's the sign that you're looking for? I mean, what's the most important thing to you? Is it simply the cuts, or is it some of the other runoff of the balance sheet that you're looking at? I mean, what are the key issues for a regional bank like yours?
I think most banks are looking for 1 to possibly 3 cuts total this year. It's looking less and less likely. Those cuts would help us lower deposit costs and ultimately drive to better earnings per share.
It would lower deposit costs, but would it have other impacts on your business? I mean, a lot of people are flocking to these money markets and sometimes these high-yield savings accounts because they don't want the risk of the market, but they want to get some kind of return.
Yeah, I think it has the potential, but I think also that sense of easing, I think might give a nice strong boost to the economy, which tends to be weakening right now at this point in time. It's not a lot softer, but it's a little bit softer than where it's been. And I think it's more of a confidence booster than anything else.
All right. So you took us to the Fed and what they might do. I want to come back to New York Community Bank. Their real issue was commercial real estate, specifically multifamilies, rent control buildings in New York City. You're in the Midwest. It's a very different real estate market, both when it comes to commercial real estate for retail and things like that, but also when it comes to multifamilies, not so much rent control. It's just a different place. Give us a sense. What's your commercial loan exposure when it comes to multifamily and also for retail and industrial, et cetera?
We do a fair amount of multifamily lending, but it's really strong. Even, again, when we go back and look at these loans years after doing the original underwriting and looking at rates that are up 300 basis points, because they've been able to push through rate increases, actually, our multifamily product has performed incredibly well, and there continues to be this structural deficit. There's more demand for housing than there is housing available. So for us, it's still a segment we continue to loan and invest in, and it's performing incredibly well.
So you continue to loan and invest in it, but how do you gauge the risk? How do you mitigate the risk? Because we continue to hear it's a risk. We're looking at the KRE down 6% year over year, just about at the 1-year anniversary of the Silicon Valley Bank issue, which had nothing to do with commercial real estate, but still highlighted the issue. How do you deal with that?
You know, so for us, it's picking the right clients. Client selection matters. Looking at those markets that maybe have still capacity to build. And not getting the issues, I believe, tend to be isolated in a few markets that have been overbuilt over the last handful of years. And in the Midwest, by and large, particularly suburban multifamily products, are going to continue to hold up incredibly well.